Hello, Uncle Jim here. Back a couple weeks ago, I had one of my best weeks. I actually did six trades during the week and made over $1,000 on those six trades. I'm going to talk about those trades in this video. I'm going to share with you the strategies that I used and why it worked out for me. This is something you can also do, so stay tuned. I think you're really going to enjoy what I have for you today. Now, before I jump into my planning worksheet for that week and share with you the trades, I do want to talk about some of the keys to passive trading for that week. First of all, I had done quite a few cash secured puts, not that particular week. I believe I only did one that week, but I ended up using the wheel strategy. I did get some assigned to me, and it's worked out quite well. Probably half of the trades that have been assigned to me are now very profitable, 10% or more. So that's something I wanted to mention, that this is my one of my first experiences going through the whole process of the wheel strategy, and it's one that takes time, but it does work out with those specific positions. I'm actually selling covered calls on them now, and I'm on the other end of the wheel, and it continues to work out quite well. The other key point I wanted to share is covered calls. Now, I found this month I've been doing primarily covered calls, and this week that I'll share with you, November 7th, of the six trades, I believe five were covered calls. And my goals for covered calls is typically to try to double the dividends. And I've been able to do that in almost every case, maybe not in one trade, but actually in a lot of the trades I have been able to double them in one trade. But I try to do two, three, maybe four covered calls every year on a specific security. And between those three or four trades, I can definitely double my dividends for that particular security. And let me give you an example. Cisco, I believe it pays around three and a quarter. And usually in one trade I can double that 3%, which when you retire and you live off your dividends, that can make a big difference. So instead of earning 3%, I can earn 6%, doubling those dividends, which can be a big difference in the amount of money I bring in monthly. The other goals I have with covered calls is to always try to sell the covered calls above whatever the stock was assigned to me or whatever I purchased it at. So, and always to a price pretty close to the 52-week high where I can make enough money. Now, if the stocks come way down, one example is Intel, well, then I may look at below the 52-week high, but look at a 20 delta or like an 80% probability it'll expire outside the money. So I know Intel has dropped significantly. I think it pays now over almost up to a 5% dividend. I think it's like a 4.6% dividend. So I currently haven't sold any cover calls on Intel, but I'm getting really close. I looked today and the market again is up today. And it still didn't make sense to sell it yet, but slowly it seems like Intel is recovering. It's in my mind, it's a potential good stock for you to look at because again, it's so low. I mean, the fact that a technology company paying nearly 5%, if you can pick it up at say 10% off its current price, it would probably be close to a 5% dividend. And I don't think it's going to go down much more. They have making new strategies. I think the chip um, the Congress passed the chip package, and I believe that's going to make a big difference with Intel and a lot of the chip makers. And then the other key point that I want to share, and I discussed this with one of the guys that's in my membership. And again, if you want to learn more about my membership's details will be below. I've got two levels. He's in the higher level where I do provide a 15-minute coaching session every week. So we were meeting yesterday, and he was looking at selling puts, and yesterday was a really big up day for the market. I believe it was up 3 or 400 for the Dow and maybe 200 for the Nasdaq. And it's important to wait for premium, and what I mean by that is you can earn a lot more premium on a down day for puts, and the reverse is true with calls. You can earn a lot more premium on an up day for calls. So be patient. On a down day, primarily look at selling puts. At least this is what I do. And then on an up day, look at doing covered calls or selling covered calls. And that typically is true unless you have something like earnings. Say it's a down day and the company has really good earnings. Well, the stock may be up for that particular company, and it may be a good day to do covered calls. So if a particular security is down because of earnings for a particular day, it may also be a good day for you to trade on that. The same can be true if they miss their earnings and they're down. Like Target has missed their earnings, I think, twice now, and they've been down huge. So you could potentially pick up Target fairly cheap. And then last, before we jump into the actual spreadsheet, is strategy and weekly planning. So I have changed my strategy from when I first started on my journey to learn the right way to sell options, which is now going on a little bit over 2 years. And now I kind of do more weekly planning. My goal each week is to earn around 700. But I still also have a goal monthly. I try to earn 3,000 monthly with premium and with selling options. But if I get to that point, like that this week, I'll share with you I did over $1,000. But the next week, I believe I did less. So if I get around that 700 and there's not a good trade that I can make at the time, then I'll typically wait for the next week. So if I get to 700 or if I reach 3,000 early in the month, I don't emphasize so much selling options. I'll back off a bit because that's my goal, is to earn around 3,000 a month or 700 a week. And I've been doing that in these weekly planning worksheets. And again, I'd release this every Monday or Sunday to my memberships, and this goes to both my memberships, a planning worksheet, and we'll talk about it at the end of this video. But it shares some of my favorites. I actually go into detail about what expirations I'm looking at for those particular companies, what strikes, what kind of delta or risk involved with it. And I typically put one out every week, and I use that spreadsheet to actually plan my trades. I actually put the information in them, and it's worked out really well for me. At first, when I started, I just had a journal and I did it monthly. By doing it weekly, I've been able to plan a little bit better, and I've been able to identify positions that may be of high risk, that may be either assigned to me and I don't want to own them. However, that's pretty unlikely. With picking good companies and good stocks that you want to own, if they're assigned to me, I'm okay with it, because again, when I make the trade, it's at a price I'm okay with owning it, because I want to pick up the dividend and I want to own good companies. So that being said, let's actually jump into this next part of the video. But before I do that, you could do me a favor by just hitting that like button and subscribing, and actually hitting the notify. It helps me with growing my channel. I'm still a small channel growing over time. So with that being said, let's jump into the next part of the video. Okay, I've opened up my weekly planning worksheet. This one again was from November 7th. You can see the date here. And I've gone over these in the past, so I'll go over them quickly. So at the top of the spreadsheet, I have my top stock picks, and these are the companies I was looking at that week, potentially to sell cash secured puts or vertical put credit spreads. So they're typically 4 companies. This week it was Western Union, Trust Company, Buckle, BKE, and then what is that, HPQ. And now the reason HPQ is in green, I actually did sell I believe a vertical put credit spread with HPQ. I believe the trade will be below, and we'll go over that here in a minute. But I share, will it be a cash secured put? And again, I always start with a cash secured put, and if I can find an inexpensive put to buy farther out, then I will, and we'll talk more about that here in a minute. So these I all mention cash secured put because none of them are very expensive. So and then I probably should have changed this to vertical put credit spread, but forgot to. I mentioned the current price. I mentioned the short strike that I'm looking at. This is the strike that I'd be happy with owning the stock at this price. I also add the expiration, and then the delta, how risky it is. Just for those of you who may not know what delta is, it's just a risk measurement. I like to look at it. So like with this first one on Western Union, it's a 12 delta, which is a 12% possibility it would be assigned to me, or an 88% chance that it will expire outside the money. So I'm less wanting to own Western Union. I do like the company; it pays a good dividend. Financially, it's kind of mixed. So that's why I'm taking a little less, or yeah, less risk. I'd rather just earn the money on the premium, but the premium isn't really good. So wasn't one of my best choices here. Truist I do like. It used to be SunTrust, and it's a good company. Currently at 43, the strike was 37, expiration 1/20/23, with a delta of 0.167, or nearly a 17 delta. So again, a 17% chance it would be assigned to me, and it had a lot more premium. I've sold quite a bit of Truist cash secured puts and vertical put credit spreads. Again, it's one of my favorite companies. It pays, I use them, it pays a good dividend. I've been happy with the bank. Um, so it's one of the ones I like to trade, and it typically is very optionable. It has quite a few expirations and quite a few strikes. Next is BKE. This is one of my favorite companies. I've talked about it in numerous videos, and it's they have, I believe, yeah, it's stores related to jeans and denim, and they do quite well. They have really good numbers. They pay a really good dividend, and they typically do a special dividend. They're getting ready to do a special dividend in December, so that's why I was looking at potentially picking them up around 11.18, so I could get that special dividend, which has been fairly significant. It's been 5 to 10%. Well, 5%. I don't think it ever went up to 10%, but if you go and you look at them, their special dividend, and they've been paying it every year pretty consistently. My guess is this year they'll probably pay a little bit less than they did the previous year, but it really ups their dividend close to, I believe, 12 or 13% when you figure in the regular dividend values. So, and again, it's a good company. I've sold a lot of cash secured puts with them and done quite well. At this point, I've not had any get assigned, and they've all expired outside the money, and I've made good money with them. Like here, you can see it's got one of the highest premiums. I am taking a little bit more risk, which is a 3 delta or 30 delta, which is a 30% chance it has of getting assigned, or a 70% chance it would expire without getting assigned. But I'm okay with this getting assigned. I want to own it to pick up the dividend, and if it goes up and it expires outside the money, I may buy BKE on my own without um, doing a cash secured put. It doesn't have as many expirations, and I believe the next one is 12/16, which may be less than the, or not less, after the X date, because you really want to pick it up before the dividend X date, or when it goes into effect. So you want to own it before the dividend X date. So I may end up buying it in late November, early December. And then finally is HP. Um, this is, I did the trade here, and it was actually, I believe it was the short strike. Um, and it's pretty consistent. It also has pretty good financial. It doesn't move much, and pays a fairly good dividend. So here I was looking at a strike of 24 when it's currently 28, an expiration of 1/20/23, and an 18 delta. And it was showing, and again, I believe I did this one on a Sunday, so I can't remember what the Friday before, but I believe the premium was even higher than this, and we'll see it in a minute, or whatever, or it may have been quite close. So this I do every week. I actually do some research and spend some time coming up with the companies. Um, and again, this is available to my Patreon members and all my Patreon members. So I release one of these every week. So here you can actually see, and I actually had some BKE, a cash secured put that I owned that was out of the money. So this, I believe, did expire. Um, now today's actually the day before Thanksgiving. So yeah, it expired on the 18th. And then this was Lumen, and these were the only two that I had in this spreadsheet. before I did any trading for the week, and it this is another um, put that I owned, and it actually got assigned. So what happened is Lumen eliminated their dividends. This is one of the rare examples that I've seen with a company just completely eliminating their dividends. So it was a little bit of a shock that they did that. They were paying $1 dividend, which gave, I believe, the dividend ended up being over 10%, like 11 or 12%. So earlier this month they decided to eliminate it, and the stock just dove because so many people owned it for the dividend. Now they also sold one of their part of their business and made really good money on it, and they're putting in the dividend into reducing debt and buying back shares. So I haven't, these shares here were assigned to someone else. So I believe I had nearly a $4 loss on these, so I picked them up at 11, and then they were put to someone else at 7. And I do have other shares of Lumen or other contracts that I am keeping at this time. I do think that they are on the right path, even though they eliminated the dividend. I do think financially they're way underpriced. They should be more like $10 or $11. So at this point, I'm keeping them. If you have some Lumen, you'll have to make that decision yourself. You may decide, well, I'm a dividend person and I don't want to own them anymore. But I don't own a lot, or I don't have many put contracts. I think I do own currently 100 shares of Lumen, but I do have. Now, actually, I own more than that. I think I own 400 shares of Lumen. So this is one of the trades that hasn't gone real well. And again, it's you never know what these companies are going to do, and them eliminating their dividend, it just took a major dive. So next, we actually go through the trades I actually made. So this first one is Cisco, and this was actually the wheel strategy. Cisco, these shares were assigned to me, and I believe they were assigned to me right around $50. And currently the stock, or not 50, I think it was $45. And currently I've got like a 12%. I'm in the green 12% with these without even the covered calls. So I sold a put, and again it was a vertical put credit spread, and it was assigned to me, and now I'm selling covered calls. So that's why I'm showing the wheel here. This is an actual wheel trade or group of trades, and it's worked out quite well. Like I said, Cisco currently is above what I paid for it. For the 6 months I've owned it, I don't think, actually it's 4 months, I've got a 12% return on the stock, not including this covered call, which I made the trade on 11/8. It was for $50. I believe at the time, let's see, at the time it was $45. So it was more than a 10% improvement. The delta was 0.21, or again, I like to do a 20 delta for my covered calls. And it's expiring on 1/20/23. And let's see what kind of premium. I picked up $124 in premium, which I believe was a little bit higher than what the typical premium that Cisco paid, or not premium, dividends that Cisco paid. And it on a yearly return, which I'm taking into effect the current price of Cisco, and that 124 here, you can see it, 124 and 70 cents divided by the 9,000 for the 200 shares at $45, and then the number of days left in the year, or the number of days in the year divided by the length of until expiration, and that's how I came up with a 7% return. And that's pretty much how I calculate my yearly ROI. But I did this just to kind of get a feeling for it. Again, my main goal is to be able to double the dividends, and again, with one trade I was pretty much able to do this. So now let's jump to the next trade. So the next trade was Micron, and again, this was a wheel. I sold a cash secured put on Micron. Actually, I think it was vertical put credit spread. The shares were assigned to me. Now they are, I think it's currently, yeah, at the time of this trade, it was a slight profit, like a 2% profit on those shares, meaning the price of the shares when they were assigned to me, it's actually the market's recovered enough that I do have a small gain in those shares. But one thing I really like about Micron, it typically has really good premium, lots of expirations, lots of strike prices. So here we can see um, I made the trade on 11/8. These were two contracts, covered call. I did them at 65. It had a 22.22 delta or 22 delta and expiring on 12/16, so not as far out, fewer days. Current price was 57, so at 65 it was literally $8 more than the current price of Micron. And again, this is the day before Thanksgiving, so even today I believe it's like 56. It stayed around 55 and got as high as 59, but it's gotten nowhere near 65. My guess is this will either expire outside the money or I'll be able to roll it. Um, Here I picked up $187, and for the return on investment, 15%, one of the best that I've had. Yeah, that's correct because I'm doing it by 94. I'm looking up here at the actual calculation. So, oops, don't want to do that. So, really, really good return on it. And Micron doesn't pay. I'm not sure it pays. It pays a really small dividend, if any dividend. So here, it's in my mind, it's almost like a dividend. And the reason the yearly ROI is so high, it's expiring in 12/16 versus 1/20. So not as many days. If you did this on a yearly basis, and yet at that time it would expire in 38 days. Um, the return on investment turned out to be quite good with it, and so the wheel in this case worked out well too. I do have it in slight reddish color. I color coded these just to show which ones are currently. So I believe Micron has dropped a bit. It may be just a slight loss, not including again this sale of this option. But so it's moving up and down. Their announcement of spending huge amounts of money on new chip manufacturing, I think, has hurt them a little bit. All the chip makers have been hurt with the fact that so much production is moving out of China. Next is HPQ. This was actually my only vertical put credit spread. So I made this trade on 11/9. It's a new trade vertical put credit spread. The short was 24 and the outer strike was 15. And again, I chose to buy the put at 15 because it was fairly inexpensive. Typically for me, that's like less than $10. Um, and then it was a 17 delta. So again, with my puts, I go with a smaller delta, typically less around a 15. It's hard to get an exact 15. So the next strike below this might have been like a 13 delta. So 17 delta is usually the closest I can get to maybe to a 15 delta. The expiration was 120.23. Current price was 28.45. So it's quite a bit below the strike is quite a bit below the current price, which I like. I like to at least to be 10%. In this case, it's closer to 15 to 20%. And let's see, the premium I picked up was 105. Yeah, 105.40. And then for this is almost like a 22% return or return on investment on a yearly basis. So a good trade. And currently it's still outside the money. I think HP announced some layoffs, and I believe it's still trading around 28, 29, something along those lines. So let's jump to the next one, which is Citigroup, and this is the credit card company Citigroup, and it's who I use. I did the trade on 11/10. Another wheel, meaning I originally sold a cash secured put. I believe it was a cash secured put, and it got assigned to me, and currently I think I've got a 10 to 12% positive return just on the stock itself, again, not including this covered call. So at the time of this trade, it was trading at 47.20, or not, yeah, it was currently at 47.20. The short strike for the covered call was 52.50. So again, at least 10% above the current price. It was a little higher delta, 25 delta, which I felt okay with because Citi doesn't move that much, and currently I still believe it's around 46 or 47, so it hasn't moved much. And then with the covered call, I picked up $182. This was for two contracts, so that takes into account two contracts. And I picked up a 10% yearly ROI. So this trade too, I believe, doubled the dividend in one trade, which worked out quite well. Again, that's one of my goals. So Citigroup is another great company to look at if you're looking for something that doesn't move so much. I've actually played with the idea of selling iron condors with it, but because of the bear market, I haven't decided to do any iron condors at this time. Maybe once we truly have come out of the bear market, I might look at doing some of that. Now, next is GLW, which is Corning, and this is a covered call. It's a new trade. I currently own about 400 shares of Corning. I really like Corning. They pay a good dividend. It's typically a good company. So it was trading at 33.47. The short strike was 40, and the delta is 23. So let me move this a little bit. It worked out quite well. A little bit of a higher delta than usual, but Corning doesn't move much either. I doubt it'll reach 40. I believe 40 maybe right around its all-time high or its 52-week high. So if it does get to 40, I could probably roll it without any problem. Um, Expiration was a little farther out, 5/19/23. So I did have to go a little farther out to pick up enough premium to make it worth my while. Again, with covered calls, I'm trying to double the dividend, and in this case, I was able to. I picked up $170, and what was the return? A little bit of a less return, like 5% yearly return on that. So again, Corning is another really good company that I recommend, and I do a lot of covered calls with it. I actually have done some cash secured puts and vertical put credit spreads with Corning because it's easier to deal with. It doesn't move crazy up and down. It may get down to close to 30 and then get up close to 35, and it seems to go in that area. So it's worked out quite well. Now this next one is you those of you who have been subscribed to my channel for a while have probably seen the videos on ARC. I'll share it up here. And this is one of the ones that I probably took a fairly big loss on, but I do have 300 shares of it still. I did get assigned ARC at I think I've got like a 30% loss currently with ARC, but I find that their covered calls work out well. So here you can see these are three contracts. It's a covered call. Again, I'm talking about the wheel because these were assigned to me because ARC it went way up and came way down, and it's still struggling. I think it's still around 35. Yeah, let's look at the current price, 36. And I did for the outer strike, I did 43, I believe that is. I'm nearly blind. And I did, what is that? A 23 delta. And I did the expiration of 12/16/22, so not very far out, and I picked up good premium. So here you can see 232, is that? Yeah, $232, which on the yearly ROI is probably one of my best, 21%. So even though ARC has been a problem child for me, I'm able to earn good premium selling covered calls now, and I'm going to continue to do that. I'm definitely not buying any more ARC. It may come back at some point when the market, changes and these crazy, crazy growing companies start growing again. Right now, a lot of what they invest in, other than Tesla, I think they've got Roku, Tesla, and a few other companies they're doing well, but they have quite a few they've invested in that have not done well. So I wouldn't suggest ARC. I mean, you could look at ARC at the current price again at 36. it's not as hard to deal with, but it's still moving up. It's unlike Corning, which moves typically in a $5 range. I'm ARC could drop all the way down to 18 and go up into the mid 40s on a weekly basis. So it is definitely a lot more volatile and a lot more risky. But at this point, I'm okay with earning some good cash on it with covered calls. So, and for the whole week, we can see, and here you see 5 of the 6 trades were covered calls. And let's come over here and you'll see for the whole, yeah, for the whole week, I did over $1,003. The average was 167 for each trade. The yearly return was like 13%, which isn't bad. Again, this is during well, the market was up this week, but it wasn't up. I guess if you break that down on a monthly basis, it's probably pretty close to what the market has been up over the last couple of weeks. But not bad for 1 week. And then if we jump back up here, at this point, the previous week I hadn't done as much. So at this point, here's my goal of 700 a week. I blew that out of the water, but part of that was because I had pretty much missed my mark the previous week. And again, since this is November 7th, I believe all but 2 days of the previous week were November. So that's part of the reason why it looks kind of low at this point. I'm currently sitting at, I believe, around 2,500 for the whole month of November. So at this point, I'm probably only going to do 2 or 3 more trades this week and next week for November to reach that 3,000. And I believe in October I did 3,700 for the whole month. So this is my planning worksheet. This is what I do on a weekly basis. When I come up with my favorites, I also look out 2 or 3 weeks. Like, I didn't have much happening. That's why only these first 2, Lumen and BKE, were the only ones on this spreadsheet. So the one that goes out after Thanksgiving, which I would believe would be the 28th of November, we'll probably have quite a few more positions expiring that will be expiring. I believe I have quite a bit expiring October 16th. So for that spreadsheet, I'll have a lot more that I'll be managing. But doing this on a weekly basis is giving me the ability to keep things safe and keep track of what I'm doing. And I like doing it on a weekly basis versus a monthly like I was doing before. So that's it. I hope you enjoyed this. Thanks for joining me. And if you have any questions, I try to answer all my comments. Please leave a comment below. And as always, have a wonderful day and a happy Thanksgiving. Thanks for joining me.